Good morning. I'm Rick Edelman. Thanks so much for joining us on this program. We're very excited to bring you our semi-annual event, the DAC-FP Vision Conference. I'm excited that you're with us today. Let me share my screen for you and we'll get this session underway. We have a really exciting event set up, and I want to particularly begin by thanking our sponsors, our lead sponsor, Fidelity Investments, our platinum sponsors, Choice by Kingdom Trust, Skybridge, and Prime Trust, our gold sponsors, Blockchain, GlobalX, Invesco, and Osprey Funds, our sponsors, Arbor Digital, Pythagoras Investments, Copper, Eaglebrook Advisors, and IBM, our media partners, Financial Advisor Magazine, Investment News, and Think Advisor, our many education partners, and of course, want you to know that we have, in addition to this content today that we're sharing with you, the certificate in blockchain and digital assets, an online 11-module self-study program with 13 CE credits, giving you a ton of information, everything that you need to know to become fluent in this subject of blockchain and digital assets, where you'll learn about the technology as well as the practice management issues. The course is $549, but by your being here today, you're eligible for our discount code, Fall Vision 2021. If you enroll by the end of this week, you'll be able to take advantage of this discounted price for obtaining your certificate in blockchain and digital assets. We also have another event coming up on November 18 at 2 o'clock Eastern Time, the role of digital assets in modern portfolio construction, featuring Anthony Scaramucci, the founder of Skybridge Capital, who you'll hear later today on this very program as well. And in June, we are taking this event, Vision, live, once again, back to a pre-COVID environment. We're very excited. The event will be held June 8 and 9 in Austin, Texas. There will be a huge array of content, including the opportunity for you to visit an actual Bitcoin mining facility. We're very excited about that. You can register right now for that event in June. The early bird registration fee is just $99 if you sign up by the end of this week. Let's launch into right now our conversation on blockchain and digital assets. We have a lot of content, as I mentioned, for you today, 6 CE credits available for you. We have more than 1,200 financial advisors registered for the event, and we're really excited about everybody paying attention to this new emerging asset class. With so many folks registered, we want to be able to take as many questions as possible during the event. It's going to be a bit of a challenge, so use the Q&A button that's at the bottom of your Zoom screen, and we'll be feathering in your cues in our conversation with all of our experts on the program today. Let's talk about the fact that the pendulum has shifted. You know, the conversation was, when I got started in the area of Bitcoin and blockchain and digital assets back in 2012, the question was, that people used to ask me is, why are you buying Bitcoin? Well, today the pendulum is shifting, and the question is increasingly becoming, why aren't you buying Bitcoin and other digital assets? So we're going to talk about all of this, and I want to just share with you the answer to the question, why aren't you buying digital assets? Already, Bitcoin's market cap is bigger than some of the biggest companies in America. The annual transaction volume is approaching $2 trillion. Bitcoin's transaction volume is 3 times more than PayPal. It's almost 9 times more than Discover. Worldwide, 200 million people already own Bitcoin, including 17% of American adults. And in addition to that 17%, another 63% call themselves crypto curious. I think that's partly why you're here today. No doubt you're getting questions from clients asking you, what is Bitcoin? What is blockchain? Should I invest? How should I invest? Can you help me with this? And increasingly, clients are expecting their financial advisors to be able to answer those questions for them. In fact, in a shocking new survey that was just released last week, more US adults say that they're familiar with digital assets than they are with ETFs. I find that astonishing. 39% said that they know what Bitcoin is. Only 32% say they know what ETFs are. This is clearly demonstrating that digital assets are going mainstream. In fact, Coinbase already now has more account holders than Charles Schwab. And Schwab's annual report on the top 5 holdings of its millennial customers, when you look at the top 5 holdings, the Grayscale Bitcoin Trust comes in at number 5. Millennials own Bitcoin more than they own the stocks of Microsoft, Berkshire Hathaways, and other major companies. University endowments are buying digital assets. So are billionaires. And we're seeing tweets from a lot of them on a frequent basis. Major corporations are buying digital assets. A company as staid and traditional as MassMutual earlier this year put $100 million into Bitcoin. The CEO of MassMutual is now on the board of NYDIG. Tesla, Square, PayPal, all buying digital assets. MicroStrategy, and you'll hear from Michael Saylor later today, has more than $6 billion worth of Bitcoin in its corporate treasury. It's now so pervasive, as you saw with filing this year's tax return, last year's rather, that it is now the very first question that the IRS asks on your 1040. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? The fact that the IRS is asking that question before they ask anything else is a clear indication that the IRS thinks millions of Americans own Bitcoin and probably aren't reporting it on their tax return. PayPal is now allowing its 325 million users to buy Bitcoin, and 30% of them are doing so. Abby Johnson of Fidelity says our goal is to make Bitcoin more accessible to investors. Prudential's George Ball, the former chair, says digital assets are very attractive. Larry Fink at BlackRock says Bitcoin is here to stay. Rick Reeder, the CEO of fixed income at BlackRock, says Bitcoin could rival gold as a primary store of value. And Neil Ferguson, the senior fellow and professor of economic history at Stanford, says the best investment opportunity coming out of the pandemic will be Bitcoin. Bernstein's Inigo Fraser-Jenkins, co-head of portfolio strategy, is now recommending 1 to 10% allocation in Bitcoin. JP Morgan Chase has set a price target of 140,000. Tiburon says the price will hit 150,000. Standard Chartered, one of the biggest banks in London, says the price will hit 175,000. Citibank's head of technicals, Tom Fitzpatrick, says Bitcoin will hit 318,000. Guggenheim says 400,000. ARK Investments says 500,000. And Fidelity's director of global macro, Jurian Timmer, says Bitcoin by the end of this decade will rise to $1 million. And by 2038, $1 billion. Yeah, that's billion with a B. The Association of Governing Boards of Universities and Colleges said, quote, cryptocurrency has already produced hundreds of millionaires, a number of billionaires, and may produce the world's first trillionaires in the next decade. Why do they care? Well, they help university endowments raise money. Where do they get the money from? Wealthy alumni. And how do those alumni increasingly get wealthy? Investing in digital assets. What about advisors? Are advisors adding Bitcoin to client portfolios? According to Financial Advisor magazine, yes, 14% are already placing digital assets into client portfolios, and 26% say they're planning to do so by the end of next year. The number one reason that advisors say they like Bitcoin is not because of the potential for profit. It's because of the low correlation. Look, we all love diversification, and we know that by adding assets with non-correlation to stocks or no correlation, it adds to the diversification. It's classic modern portfolio theory from Harry Markowitz, the efficient frontier. Adding a risky asset to the portfolio lowers the overall risk of the portfolio. And Bitcoin has a low to no correlation to to all other asset classes, truly improving the ability for you to create diversification in your client accounts. And let me now launch, we're right on time, with our very first session. Now that I've set the stage for you as to asking the question, why aren't you in this environment buying Bitcoin and other digital assets? Let's launch into our very first conversation with Sunaina Tuteja. She's the Chief Innovation Officer of the Federal Reserve. Following that conversation with Sunaina, we're going to hear from U.S. Senator Cynthia Lummis of Wyoming, followed by Anthony Scaramucci of Skybridge Capital, Michael Saylor of MicroStrategy, David Cantor of Fidelity, Glenn Barber of Copper, Sean Ristow at Prime Trust, Mitchell Dung of Pythagoras Investments, John Hoffman of Invesco, Greg King at Osprey Funds, Ryan Radloff of Choice by Kingdom Trust, Dan Iyer at Blockchain, Chris King at Eaglebrook Advisors, Matt Koleski from Arbor Capital, John Mayer of Global X. We have an action-packed agenda for you today. I'm glad you're with us throughout this entire program. It's going to be very exciting. Let's jump right in with our very first session, getting the latest on crypto from the Federal Reserve. And I'm very happy to bring on our first guest doing this. To do this, we're going to leave this session and go to the very next session. So I'll join you there in just a moment. See you there.